Visa Accounts Teachings by Ramesh Kumar. My mobile number is 614-35205206 and my mail ID is kumar.ramesh5759@yahoo.com. Today we are going to start with a comprehensive question on retirement of a partner. In this question there are three partners PQR. They are sharing profits and losses in the ratio of 5:3:2. Their balance sheet is given as on 31st March 2012. On that date, that is on 31st March 2012, Q retired, and on that date the balance sheet was as under. On liability side, you are given capitals. All are in rupees 1000. P's capital 500,000 mean 5 lakh. Q's capital 300,000 mean 3 lakh. R's capital 2 lakh. Sundry creditors 1,56,000. Bank overdraft 24,000 and the total of liability side is 11,80,000. Now on the asset side, machinery 4,30,000, furniture 1,64,000, stock 3,51,000, debtors 2,35,000. Total is 11,80,000. Now you are given the adjustment. The firm's goodwill was rupees 2,50,000 and Q was entitled to the credit for his share of goodwill. Total goodwill of the firm is given 2,50,000 and he wants that retiring partner share is to be given to him. If you see carefully PQR, share of Q is 3/10. So 3/10 of 2,50,000 comes how much? 75,000. That is 75,000 is to be given to Q. And that will be charged from P's capital and R's capital in their gaining ratio. What would be the entry? P's capital account debit, R's capital account debit to Q's capital. Q capital will be credited with 75,000. Second is P and R would continue to partners but should share profits in the ratio of 7:3 respectively. New ratio is given of P and R. What is 7:3? That is P 7/10, R 3/10. If you see old share of P is 5/10. Now it is 7/10. So how much he has gained? 7/10 minus 5/10. That is new share minus old share. 2/10. And R new share is 3/10. Old share was 2/10. So 3/10 minus 2/10, 1/10. The 2/10 is to 1/10. How much is the gaining ratio? 2:1. Now 75,000 if you divide in the ratio of 2:1, how much it comes? 50,000 and 25,000. So P's capital account debit 50,000, R's capital account debit 25,000, to Q's capital 75,000. The amount due to Q would be paid immediately, and for this purpose P and R would bring in cash in such a manner that the total capital of the reconstituted firm was rupees 1,000,000, that is 10 lakh, and the capital accounts of the partners were in their new profit sharing ratio. Here new profit sharing ratio is given 7:3. If you divide 10 lakh in the ratio of 7:3, so how much P's capital comes? 7 lakh, and R's capital comes 3 lakh. Now this would be their closing capital to balance CD, 7 lakh and 3 lakh. And then we have to find out how much cash they are to bring it. Assuming that all the above mentioned conditions were fulfilled, pass journal entries in the books of the firm for all the transactions. Also prepare the capital accounts of all the partners. Now since he is not saying anything regarding Q's capital, that is Q is to be paid immediately. So Q's capital is 3 lakh and he is getting 75,000 for goodwill. The total share is coming 3,75,000. So we will pay him to bank 3,75,000. Entry for goodwill, I told you, P's capital account debit, R's capital account debit to Q's capital. In Q it would be by P's capital 50,000, by R's capital 25,000. In P and R it would be to Q's capital 50,000 and 25,000. Then the total capital he has given 10 lakh, which is to be in the new profit sharing ratio of P and R. If you 10 lakh you divide in the ratio 7:3, of P's capital it comes 7 lakh and R's capital it comes 3 lakh. The two balance CD 7 lakh and 3 lakh. Total of P's of debit side comes 7,50,000. If you take it to credit side by bank, how much he will have to bring? 2,50,000. And R, his total capital, his total on debit side is coming 3,25,000. His capital was 2 lakh. How much he will have to bring? 1,25,000. So what would be the entry for this? Bank account debit 3,75,000. To P's capital 2,50,000 and to R's capital 1,25,000. Here you are to calculate gaining ratio also. Old ratio was 5:3:2 PQR. New share is given P and R 7:3. P's gain 7/10 minus 5/10. How much it comes? 2/10. R's gain 3/10 minus 2/10 is equal to 1/10. The gaining ratio comes to 2:1. So therefore, whatever goodwill 75,000 is given to Q will be charged from P and R in their gaining ratio, that is 2:1. 1. So when 75,000 is divided in the ratio of 2:1, it comes 50,000 and 25,000. So what is the general entry for this? That is P's capital account debit 50,000, R's capital account debit 25,000 to Q's capital 75,000. If you like this video, kindly like, share and subscribe it. Thank you very much.